Welcome to the TAC Index AI podcast, November 2025, where we blend TAC IP data, reports, and charts with the latest news and all things logistics with a focus on air cargo.
And we have a lot to talk about.
We really do. For today's deep dive, we're looking at this really extraordinary surge in air freight rates. But we also want to connect that pressure back to the bigger picture, trade policy, high-tech investment, all of it.
It's a perfect storm, really. What just jumps out from the data, looking at everything up to November 17th, is that global rates are hitting their highest point of the year.
The highest of the year.
And I think it's important to say this isn't just your standard seasonal peak. There's a huge, unexpected supply constraint that's really pouring fuel on the fire.
Okay, so let's get into the numbers. The Global Baltic Air Freight Index, that's the BA-ISX0, our benchmark, it gained, 4.6% just week over week?
A huge jump, and that means global rates are now sitting about 2.4% higher than they were this time last year.
And last year was already a strong peak, right?
Yeah, exactly. So that added disruption you mentioned is the real story. The timing is just incredible. This spike is happening right as all MD11 freighters have been grounded.
Following that tragic crash in Louisville earlier this month.
Yes. And that event, it just instantly took a massive slice of capacity out of the market. Right at the moment, traditional peak demand for Thanksgiving and Christmas is really starting to hit its stride. It's a major capacity pinch.
And you can see that pinch in the major hubs. It's not a slow ripple, it's more like a shock wave. Outbound Chicago, for instance, surged over 13% in 1 week.
13.4%. I mean, that's just a staggering number.
And it's not just a North American story. London Heathrow rates climbed 9% week over week, which puts those lanes, over 16% higher than last year?
16.7% higher. And the demand is global. You still see solid gains out of Asia outbound. Shanghai gained over 4%. Frankfurt was up nearly 6%.
So what does that tell you?
It shows that while the demand is everywhere, that MD11 grounding is hitting the U.S. and European hubs the hardest. It's really stressing those critical transatlantic lanes.
It's good that TAC Index just added those 22 new lanes. It gives you that extra granularity to see exactly where the pressure points are.
It does. It helps a lot.
So this brings us to the bigger economic picture. How does this capacity crunch fit in? We know steep tariffs have been, scrambling global trade all year.
Right. And you saw the U.S. trade deficit narrow pretty sharply in August. It was down 24% from July, which actually helped third-quarter GDP figures.
But that's where you get this sort of tariff paradox, isn't it?
That's the perfect word for it. The U.S. trade position improves a bit, but you see the blowback elsewhere. Tariffs are hitting global growth. We've seen economies like Japan, Switzerland, Mexico, and Ireland actually contract in Q3.
So the tariffs are working to reduce imports, but they're also depressing demand and kind of gumming up supply chains everywhere else.
Exactly. But here's the twist, and this is where it comes right back to air cargo. That negative tariff impact is being offset by one massive thing. This incredible surge in AI-related investment.
Driving huge import demand for semiconductors, processors, servers.
All of it. And these are the exact kinds of goods that have to go by air. They're high value, they're time critical. You can't wait for a container ship when you're building out AI infrastructure.
So that intense demand is basically propping up air freight rates, even with all this other global turbulence.
It's the key support pillar right now. And it's all happening while policy is still so uncertain. I mean, the news that the planned 100% tariff on semiconductors is probably delayed, that's a huge signal.
Right. It seems officials are trying to avoid a complete rupture with Beijing, especially when it comes to the flow of rare earth minerals.
And for you, if you're a planner, that delay is both a good thing and a bad thing. It's a temporary break, but it also just highlights the risk. The policy uncertainty itself becomes the thing you have to plan for.
So that's really the tension we're left with. You have air cargo costs going through the roof because of an immediate capacity shock, the MD11's plus peak demand.
And that's all layered on top of this macro picture of delayed tariffs on one hand and this roaring, unstoppable demand for AI hardware on the other.
Which brings us to the final thought. This very strong, very concentrated demand for AI-related goods, the stuff that travels by air, it might be masking a deeper slowdown in the broader global economy.
It absolutely could be. So the big question you have to ask yourself as we head into 2026 is this: which force is going to win out? Will it be the sustained, robust demand from the AI boom, or will the growing drag from global tariff uncertainty pull everything down?